Hello, everyone, and welcome to another episode of the Wise Decision Maker Show, where we help you make the wisest and most profitable decisions. My name is Dr. Gleb Tsipursky. I'm the CEO of Disaster Avoidance Experts, the future of work consultancy that sponsors the Wise Decision Maker Show. And today with me is Rob Sadow, who's the CEO and co-founder of Scoop, the creator of the Flex Index. Rob, can you tell us a little bit about the key findings from the Flex Index?
Sure. So the Flex Index is a global repository of office requirements. So we have requirements from 4,500 companies across 30,000 plus offices. Those companies employ more than 100 million people. And so we can look month to month, quarter to quarter to understand trends in return to office, remote work, and see how office requirements are evolving. So over the last 3 months, one of the most interesting findings is full-time in office as a share of office requirements for companies dropped from 49% 3 months ago to 42% now. So companies are getting more flexible. 51% of companies offered work location flexibility 3 months ago. That's up to 58% now.
Excellent. Now, let's think about how that squares with all the headlines about companies like Amazon and so on asking their employees to return to the office, and other companies like AT&T, like Amazon now, AT&T in September. So what do you figure will be going on in the future given these headlines?
So I think what's happening, at the same time we're seeing headlines and a lot of data points around the return to office, at least on a percentage basis, stalling out. What we're finding is that hybrid work in some ways is kind of taking from both sides. So in our latest data, we found that structured hybrid, and when we use the term structured hybrid, we mean when companies set specific expectations on when or how often an employee is supposed to be in the office, that grew from 20% of companies 3 months ago to 30% now. When you look at that 10% change, 7% of it came from the full-time in office, right? Full-time in office dropped from 49 to 42.
Okay.
The other 3% came from companies that were either fully remote or what we call employees' choice. So employees can choose when or how often they go into the office, which dropped 3 points. And so while you do see some companies like Amazon, for example, going from employees' choice to a structured hybrid model and increasing their office usage, we're seeing a greater percentage of companies go from full-time in office when they were 5 days a week down to 2 to 3 days a week. And so that's why you're seeing some of that stalling out. And based on the trend, I expect the percentage of companies that are full-time in office to continue to drop, hybrid to continue to pick up share. And so I think the vast majority of employees will be at companies that do have some office presence, but the percent of companies that are full-time in office will continue to decline.
That's interesting that you said the vast majority of employees will be at companies that require some office presence. So I've helped 23 companies by now transition to hybrid work schedules that return to office. And in the large majority of cases, there are a small, in most cases, minority of people who are allowed to work fully remotely, who are mainly individual contributors, people who, let's say, do programming or accounting or something like that, that doesn't require that much teamwork, and where people can report directly to certain managers and so on. It's kind of not so much of a team dynamic. And so it seems to me that a lot of companies do have arrangements where certain people are allowed full-time remote work, but those people are a small minority of the team. So I'm curious if that's what you're thinking about that when you use the term structured hybrid.
Yeah, that's exactly right. So I think the number or the percentage of companies that we find that are fully remote is something like 7-8%.
Yeah,
right? So
very
relatively small companies that are fully remote. To your point, a lot of companies have particular roles or particular functions maybe that are allowed to be fully remote, or even that are employees' choice and they can choose whether or how often to go in. What we do find, though, is that disproportionately that level of flexibility is found in smaller companies. And so to give you an example, if a company has less than 500 employees, we actually find that more than 60% of them are either fully remote or give employees choice on when or how often to go into the office. When you look at the other side of the spectrum, so employers that are 50,000 employees or more, it drops to, I believe, 13% that are fully flexible versus a significantly larger number that are hybrid. And so in practice, if you think about the experience that most employees will have, in terms of what their work expectation or being in the office or not, most employees will probably still spend a portion of their time in an office. but it's not ubiquitous, and it may vary a bit by function and size of company and industry.
Okay, so to rephrase, it seems that the proportion of companies is going to be a substantial proportion of companies that allow fully remote work or employees' choice. But given the tail end of the companies that don't allow that are going to be the largest companies where the most employees will be working, the experience of most employees will be structured hybrid.
I think that's right. And I think maybe to phrase it a different way too, obviously there's a lot more small firms out there than big firms, right? Exactly. And so the small firms, yes, I think you'll find more flexibility, but large companies disproportionately employ a lot of people as well, right? And I think that that'll impact the experience for a lot of folks.
Yeah, exactly right. Okay, so that's good. That's good to clarify. So if somebody was thinking about that they want more flexibility, it would be to the advantage to work in a smaller firm.
That's what we find. If I were to describe in some ways the epicenter of where you're going to find flexibility, typically it is smaller companies. It is in particular industries. And so the industries that we find most commonly are tech, which is far and away the most flexible. I think 70+% of tech companies are fully flexible still, which is a big difference, right, from other industries. It's in particular geographies. So in the US, for example, we find that companies that are located in the West and the Northeast are more flexible on average than companies that are located in the South or the Midwest. So it gives you a little bit of a sense for kind of where and what type of work you're more likely to find greater levels of flexibility versus more office required time.
Now, when I talk to leaders, I help large companies, Fortune 500 companies. I also help middle market companies and growing startups. What I tend to see as the key driver of flexibility is a company's desire for talent. And it tends to be the case that Fortune 500 companies place much less emphasis on talent. They have systems, they have processes, they have strategies. The individual employee contributors matters less to them. Whereas at smaller companies, especially at startups, but also at middle market companies, the individual contributors matters quite a bit more to them. And so that emphasis on talent is much higher. And of course, if they want to retain the best talent, they will then give them more flexibility. I'm curious if that resonates with what you're finding.
It does. I think there's a couple other elements too that similarly drive toward that same conclusion as to why smaller companies tend to be more flexible. One is that when companies are smaller, there's a much higher focus on, are we going to survive or not, right? Like the actual, profitability and cash burn of those companies is really front and center. It's not that it's not important for a Fortune 500, but it's a little bit less existential for a big company versus a small company. And so for small companies, offices traditionally are a huge part of the expense base, right? It's generally the second biggest expense behind people. And so for small companies, if you can get away with no office space, or you can get away with less office space for longer, that can make a really big difference in terms of the viability of the company and the ability to get to profitability. And so I think that's an element of it. The other thing that we find is smaller companies, especially in tech, at early stages tend to hire people who are a little bit more senior in their career, meaning that the earliest employees tend to be somewhat experienced, or hiring other experienced folks who can contribute right away. There's a little bit less of the hiring straight out of school or building kind of like talent development pipelines, if you will, and career pathing within the company at the very early stages. And so that comparatively less focus on newer talent coming in, needing to be mentored by older talent or kind of more experienced talent, I think also makes it a little bit easier to operate in not co-located way. Whereas I think when some of the companies get larger, one of the things that we hear the most as a challenge, and I'm curious if you hear the same, is mentorship and how do you train kind of newer folks into the workforce is just a little bit more challenging in some particular functions or types of fields. And I think that's part of also why you see a little bit more office time for larger companies than you do for some of the earliest companies starting out.
Yeah, with my clients who are middle market companies, but who are more established, I definitely see more of a focus on mentoring and more of a desire to have young people spend more time in the office to get mentoring. So it's definitely the case that happens, yes. But I'm curious to talk about a little bit about the difference between, and I'm curious, I don't know if you track this, difference between family-owned firms versus not family-owned firms, because I've seen family-owned firms have quite a bit more of an emphasis on being in the office than the non-family owned firms. Partially, I think, because the not family owned firms are more professionally managed, and not to criticize family owned firms, but that's the difference, right? Professional management versus family management. And that professional managers do look at the bottom line and they see that by offering flexibility, they can get better retention, better recruitment, employee engagement, they can save on costs and the office space and whatnot. I'm curious if that's something that you're finding.
Yeah, that's super interesting. I confess I have not looked at that,
Mm.
but as a next step, I may go back and look at our Flex Index data and see if we can pull some of it and see if that trend holds. What you said makes a lot of sense, but it isn't something that I've looked at before.
Mm-hmm. Okay. Now, I want to ask about the structured hybrid model. So I was working with one company literally in the last week. We were deciding on how to do things. And they had a model of having people come in 3 days in the office. And we decided to switch to a model of people coming in based on a manager-led model, where the manager, together with the team member, decides on what the office is for, the kind of activities that need to be done in the office, and then people are coming into the office to do those activities. And I'm curious, how would you define that within your modality of structured hybrid versus employee choice? Because it seems it's not really employee choice. It's kind of like the team leader chooses based on certain clear guidelines and principles. So I'm kind of trying to pull on the thread of what the structured hybrid actually means.
Sure. So when we think about structured hybrid, there are a few different types of models for structured hybrid. So the most common one we find is what you described, which is minimum days a week. So company sets a designation that everyone or all corporate employees, for example, need to be in 2 days a week or 3 days a week. On average, we find it to be 2.53 to be specific. So roughly half the time in the office, half the time not in the office. Second most common is specific days. So everyone should be in on Tuesdays and Thursdays, for example. Third most common is both minimum and specific. So that could be, we want people in 3 days a week, and one of those days needs to be Tuesday. And then the least common we find is percentage of time. So we want people to spend at least 20% of their week in the office. One of the reasons why I think minimum days per week is becoming more common, more popular, and we saw a big move toward minimum days over the last 3 months. I think now 62% of structured hybrid firms are minimum days, is because minimum days allows, in some ways, the company to set the kind of like almost like the bumper rails from a bowling game, for example, and say, hey, look, we want people to be in the office, 2 days a week or 3 days a week, but we're going to leave the flexibility on what days those are to the front lines. And a manager or a team can actually set team level agreements. I think that is likely to be a much more effective model over time than designating for the entire company. Everyone has to be in on Tuesday and Wednesday, because different teams have different cadences. They may have different kind of needs based on the type of work that they do, different personalities or kind of working styles within the team. And so I think that balance of some structure for bigger companies, but then pushing the specifics around that structure to the front lines and managers and teams to then come up with their own agreements on how that manifests will be in some ways maybe the most effective for larger companies. And so I think it's in some ways, to answer your original question on how we would define it, it's still structured hybrid, but instead of the company saying, hey, look, everybody in the company has to do this, it's, hey, here are the guardrails around it. And then we're going to allow the specifics within that to be defined at the team level.
Yeah, what we did was we set a certain framework where we figured out what are the decision-making criteria by which teams are going to make a decision. So learning is going to be the most important criteria, followed by recruitment, followed by retention, followed by innovation, and finally well-being. So those are going to be the criteria by which team leaders are making the decision, okay, how often are you coming to the office? And it's going to be a slow transition where right now it's still 3 days a week for everyone, and then the company will decrease that obligation from 3 days a week to 2 days a week, where the manager gets to decide, okay, if you want 2 days a week, choose the 2 days. You can also decide 3 days a week or whatever, but that's going to be a slow transition over time. So it sounds like the company is going toward what you're describing as more companies going toward.
And I think that's right. And I think there are a couple major benefits to that. One is, in the event that different teams end up spreading out to different days, not everybody is in on Tuesday or Wednesday, for example, then the aggregate real estate needs for the company come down a little bit, right? Exactly. And so there's some cost saving opportunity around that. It also probably creates a better balance. In some ways, I've described what's happening between companies and employees in the structured hybrid world is a bit of a truce, right? I think the average executive at a large company generally would prefer people be in the office a little bit more often, at least we see. The average employee would typically like to be in the office a little bit less often. But a structured hybrid model where you spend part of your time in the office, part of the time working remotely, you kind of agree with your team on what that's going to look like, preserve some of the aspects of flexibility that I think have become very important to employees over time, while still accomplishing some of the core objectives that companies are hoping to accomplish, and co-creation and collaboration in office and what that looks like. And I think that's why those models are starting to gain momentum and popularity.
Excellent. Well, let's finish up with the last question I want to ask you, which is about the impact of AI on hybrid work. And here's what I'm seeing already in my clients. AI is enabling better communication and coordination, which decreases the need for people to be in the office because they can communicate and coordinate more easily when they're working remotely. So my prediction is that AI will enable more people to spend more time working remotely while still in an overall structured hybrid model, because there's a decreased need for communication and coordination, which is replaced by AI. So as a last question, what do you think will happen?
I think you're right. And frankly, as a company, Scoop, our software, is quite focused on some of these types of challenges and how do you integrate different capabilities, AI included, to solve them. And so we build software to help enable hybrid teams and specifically help employees figure out, well, when is it most productive for me to be in the office? When will other folks be there? So I know that's going to be a good day in the office versus I go in and spend the day on Zoom and ask myself, why did I come into the office in the first place? Yeah. And so I think the more that technology enables cutting out some of the cost associated with making the decision as to where you're going to work, and making sure that when you work from home, you feel like you've got the right activities on those days. And when you're in the office, or even that software recommends to you when to come into the office based on the things you care about, the types of meetings you have, et cetera, I think that's more efficient, and it will enable hybrid to operate more smoothly in the future as that technology gets better and better.
Excellent. Well, thank you for sharing your expertise, Rob. That was very helpful.
It's my pleasure. Thanks for having me.
And thank you to the audience for checking out another episode of the Wise Decision Maker Show. Please make sure to subscribe wherever you checked out the show and leave a review. It helps others discover the show, and it helps us improve the show. All right, everyone. I look forward to seeing you in the next episode of the Wise Decision Maker Show. In the meantime, the wisest and most profitable decisions to you, my friends.